Morning, Steve here in Chicago with the morning grain comments. Well, happy Friday to everybody. Overnight, grain prices are a little bit lower. We're trying to back away from this week's rally after the USDA's bullish September stocks numbers. As far as the weather goes, it looks like we're going to see some rains across the Midwest this weekend and some maybe next week, but the long-range maps show a little bit drier trend. And not quite as cold. There still looks like some freezing temperatures in the Northwest, Midwest, October 10th through 12th, that might shut down crops there. But other than that, outside the rest of the Midwest, we don't really see any freezing temperatures. The cool temperatures, though, might slow maturation, and it's still a big question mark. Again, this is the latest I've ever remembered us not really knowing what the U.S. corn and soybean crop is. Today we'll have a private estimate from one of the groups of what they think the crop is. They continue to be on the high side for the most part of corn and beans versus the rest of the market. We also saw yesterday corn and wheat export sales not meeting the pace needed to reach the USDA's goals, while the soybean export sales were better than expected, with some of the rumored China purchases finally catching up to the export sales data. South American weather looks like it might be a little dry for some parts of Brazil, but this is kind of normal this time of year. The monsoon really doesn't start until late October, early November. But we do see some rains coming into the parts of Argentina. So most of all, I think South American weather is good. Wheat market, prices in Russia continue to move a little bit higher, but not in Europe. Europe continues to be the cheapest wheat in the world. We're still a little bit concerned about Canada's quality, and Australia remains dry. But I think we're going to need a real weather problem to push wheat prices higher. Technically speaking, the beans are in a 920, 890 range in November, and I think we might test the upside if the report on October 10th shows a little bit lower bean carryout. Corn is in a 390, 380, very tight range. We might take out the 380 area eventually, but we could actually trade over the 390 area if the USDA lowers next year's carryout. Wheat could not push over $5 in December. 480 is support. The next support would be all the way down to 460. Outside markets, stock market is just above the 200-day moving average. We haven't traded below that since May, and we're watching and see what the jobs report data suggests. But again, the stock market has been on the defensive because concern about global slowdown in economies, recession, no trade deal with China, versus the fact that there's like a 90% chance now that the Fed might lower interest rates in their next meeting. Lower interest rates has been bullish to the stock market to date. So we'll call for a quiet volume today, choppy trade going into the October 10th report. We'll see if the USDA gives us something bullish, and then once we get into harvest, see if we pull back in prices. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.